All right. Today is Wednesday, October 30. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. You might notice that I'm a little happy today. I might even say, what a day, what a day, what a day it was. Well, Maverick, the stock market is flat after hours. Nothing happened today. What are you so hot about? Let me tell you what I'm hot about. I'm hot about three of my big shorts. Going down big today. Beginning with Wingstop, down over 21% today alone. And then the Ozempic scam, Eli Lilly, down over 6% today alone. And then you got the biggest fraud of them all, Supermicro, down over 32% today alone. And more to come. That's what I'm hot about. And we're just starting here, folks. All of this fraud, all of these bubbles will come down crashing like you've never seen before. And I try to point this stuff for you guys all the time. Every bubble reacts the same way. They start the same way, they end the same way. You got opportunities to the upside, but the majority of folks chasing the opportunities on the upside end up losing. And only the insiders cash out. But there are also the opportunities when the bubble goes bust. All the way to the downside. But again, folks are so skeptical and they say, Maverick, you're a perma bear, market just goes up. Okay, you do what you do, right? Keep chasing. You're going to invest what? 50 grand in NVDA, you made 50%. Oh, that's cute. That's what, 25 grand? What are you going to buy with that? A house in this economy? That's not even enough for a decent vacation. You're not going to climb the economic ladder that way. You're only going to make the Wall Streeters and the scam artists richer. And then they drop the whole house on your head. But to each his own. If that's what you want, hey, stocks just go up and yada yada. Keep going. Good for you. I'll do what I do best. Making major scores. Because the way to climb in the economic ladder, in these bubble scams, we see one every 10 years or so. When you short these bubbles, you're borrowing money that doesn't belong to you. You can access more money that you can play with a margin requirement. And if you get it right, and you make a score, now you're making money outside of the boundaries of what you got before. But making 10% of the stock market, well, you're within the boundaries of your investment. You're not getting beyond that. You're not climbing the economic ladder. And there's nothing that I love more than taking millions of dollars from these rats, making a big score, and then returning about 10% of the money back. Here's your money. Thank you so much. Go fuck yourself. Do you think the lender who gave me $3.7 million to short Supermicro computers will see any of that? I mean, they'll be lucky if they see 300 grand. Lucky. That's how you beat Wall Street. That's how you stick it to the man. You don't stick it to the man by making him richer. But again, the dumbest generation of investors we've ever seen. And they will have their day in court. They will be destroyed. Keyword destroyed. You think the oligarchy wants to make everybody richer from the stock market scam? No. They want to get rich, take your money, and then drop it in your head. But some people need to learn the hard way. I know what you're going to say, but Maverick, you can have access to bigger loans because you got experience or whatever. You had a fund before. Maybe, but I didn't start from anything. I got nothing. I came to this country with $200 in my pocket, which I lost right away in New York City. I got attacked and robbed by a bunch of Puerto Ricans. I was talking on the phone with my mom in my native language, and I think they mistaken what I said as me calling Puerto Ricans as garbage people. I think that's what really happened, but that was a long time ago. And I took my revenge by banging a bunch of Puerto Rican chicks later on, so I feel good about it. Bottom line is, began with nothing, little by little by little, shorting these bubbles, one by one by one. And that's how the wealth was accumulated. And again, we're just starting here. In this episode, in this bubble that we have right now, I'm just beginning. But folks, you might wonder, why did Supermicro Computer go down by over 30% today alone? Well, let's segue to the headlines of the day. And the first headline, Supermicro stock in free fall after accountant resigns. It is so bad, even the accountant from Ernst & Young said, you know what, I'm tapping out, goodbye. This company is a massive fraud. I don't know where to begin. They're not even being transparent. If you want me to do the accounting, give me all of the data. Of course, this is a scam company, and I told you this before. And people said, oh, Maverick, you're just jelly. You're jelly about the gains. Okay, now you know. You think I haven't invested in this company before and I sued them because they defrauded investors? It's not the first time. It's a company built on fraud. And you got to remember, they're still late in their filing. They should have filed in August. We're now in late October. We're heading to November. They still haven't filed their earnings. And the accountant now resigned. Something big and major is going on here. And it is manipulation of accounting and fluffing up the numbers for the stock to go higher. And folks, the insiders, the CEOs keep dumping and getting rich. You think any of them will go to jail? When the SEC in the coma, you think we're going to have this kind of justice where we put the CEOs and the insiders and the big scammers of Wall Street and lock them up in jail? Of course not. But if you take advantage of a glitch on JP Morgan, or you go into jail for a long, long time. And imagine if this is what's going on in Supermicro. Imagine what's going on in NVDA, the biggest fraud of them all, with the core weave and the money laundering and, let's make fake companies in the Cayman Island and pretend that they're buying billions and billions and billions of dollars of chips, which is, by the way, NVIDIA buying chips from their own company and writing that as revenue. Wait till that comes to the surface. Anyhow, in other news, we got a lot of macro today. We begin with the ADP. Private job creation totaled a stunning 233,000 in October, far more than expected. And this was a cartoonish reading because it was way above expectations, blowing up all the numbers that the market didn't even take it seriously. The market said, okay, this is a scam. This is a cooked number. ADP, who gives a shit? What matters is the payrolls beginning Friday. And the cooks will have limited ability to cook that number. With the hurricanes and the temporary workers not getting renewed, they're going to have a really hard time to spread that salt and pepper and make it look nice. The reality of the economy, we talk about layoffs all the time, and the latest being Dropbox, laying off 20% of the staff. And if you think that the stock market is not the only thing keeping the economy from collapsing, why do you see that these layoff announcements happening in stocks that already crashed? What do you think will happen when the big guys go down? The whole economy will go kaput in rapid speed. You're not going to even be able to wrap your head around it. And then we got the GDP, and it says U.S. economy grew 2.8% in the third quarter, less than expected. And if you take the cooking and the manipulation away, because that 2.8% looks pretty good, right? I mean, missing expectations, got it. But it's not a bad number until you look at the contribution of this number coming from government consumption. We are, ladies and gentlemen, as I said before, this week, we now have a communist economy where the government does all of the spending. The government steals from the future generation of this country by printing money and adding deficits to fluff up the market and just keep this facade going on. I promise you, it will catch up with us. And the ending is going to be horrific because the higher the debt goes, the higher the deficit goes, it becomes irreparable at some point. And the only remedy would be austerity measures, cutting spending dramatically. The quality of life here in the States would drop dramatically. Stock market will be stagnant for years. You think the oligarchs don't already know that? Listen to the speech by Elon Musk recently when he said, yes, Trump is going to win, but we're going to have hard times financially because we're going to have to do some austerity measures to fix the disaster of the debt and the deficit. We have to do austerity measures for years. He says it's going to be a temporary, of course, to put a lipstick on a pig, but it's going to be horrific. And this is why Rev Musk and the rest of the oligarchy are cashing out billions and billions and billions of dollars, buying bunkers in Hawaii and Lake Tahoe, whatever, spending money on bodyguards, buying farms. They know what's about to come. And speaking of Rev Elon, today we got the devastating news that BYD's revenue now exceeds the revenue of the souffle. BYD right now is a bigger company than Tesla. But pretty please, look at the valuations. You think the valuation of Tesla makes any sense at all? Of course not. The stock should be clipped down by more than 70% to reflect the true valuation. Or maybe BYD is extremely undervalued. I think we know what the reality is. Tesla is extremely overvalued. Now remember, Tesla improved the margins this quarter by cutting costs, getting rid of employees. Okay, good for you. You did the job for this report for this quarter, initiating a squeeze that pushed the stock higher. Good job. What happens from this point on? How do you maintain better margins? You gonna fire all of your employees and replace them with humanoid robots? Not gonna happen. Your ability will be limited. The only avenue to keep the margins good and expand them is to increase revenue. And that's becoming impossible right now. This is the beginning of the end of Tesla as a growth company because revenue been stagnant, as you can see right here. And the fact that the sales of BYD now jumping higher, it's happening at the expense of Tesla. They're taking market share away from Tesla. So the growth in China will be limited. From this point on, revenues will trend down for Tesla in China. Then you look at the political backlash. I promise you, folks, if Trump wins the elections, they're going to blame it on Musk. They're going to say Musk is the one who gave us Trump. And you're going to see a major backlash that will impact Tesla sales negatively here, too. And then what happens? How do you expand the revenue to keep the margins afloat? But again, to each his own. And then we got a piece of news from OPEC Plus saying that they could delay the planned oil output hike scheduled for December by 1 month or more. OPEC Plus sources say. Look, we told you that OPEC is not insane. They're not going to raise the output right now. Why would they when we have recession concerns in the economy? And all of this bullshit talk about, Saudi Arabia is going to start a war again. I haven't heard any of that from the most trusted sources in Saudi Arabia. It's suicide. They wouldn't do it. Why would they do it right now? But the American media floats these headlines to push oil down before the elections. It ties in with the manipulation of the GDP and retail sales and the jobs numbers. They're desperate because they have nothing to show. They can't look us in the eyes and say the economy is doing pretty good. Vote for us, because we all know that the economy is not doing pretty good. So they have to give us the fake data to give us the illusion that the economy is doing pretty good, but maybe I'm a loser. I'm not doing so good in the economy, but everybody else is doing pretty good. So maybe I should vote for Kamala. Anyhow, in other news, since we shit on Germany earlier this week, we got an update in the German economy. And it reads Germany's inflation surges to 2.4% as it narrowly skirts a technical recession. I got news for you. Germany's already in a deep, massive recession. You're not seeing it because everything is tied into the stock market here in the US. Our market goes down, Germany goes kaput. And now they got an inflation problem too. So they got a stagflation problem. Inflation is bouncing back. Madame Lagarde, what are you going to do about it? Keep cutting? Good luck. And that wraps up the headlines of the day, but we're going to segue to the earnings. We begin with Eli Lilly, huge company in a massive bubble, of course, because of the Ozempic mania, but the bubble today officially, poof, gone, kaput. Eli Lilly was down more than 10% in the morning, missing estimates and slashing the profit guidance. This was just a matter of time, and it is an example for how every bubble rises and then goes kaput. Why do they go kaput? When you have a bubble, the birth of a bubble, usually it happens because of imbalance between supply and demand, which leads to higher pricing. But as that higher pricing causes whatever company that is enjoying this sudden increase in demand, it tells competitors that there's a juicy piece of cake right here and you got to get your hands on it too. So in time, they figure out how to increase the supply, the competitors, and with it, the pricing goes down, and then the entire bubble goes kaput. I mean, right now, you can get an Ozempic at the massage parlor, and it's going to cost you a fraction of what you're going to pay Eli Lilly or Novo Nordisk for it. Ozempic is all over the place. Compounding pharmacies all over the country. You can order Ozempic online. And this is why Novo Nordisk is asking the FDA to ban compounding pharmacies for making Ozempic and Wegovy copies. They think they can grease the FDA with a little bit of cash and have a monopoly. And we know the FDA is corrupt, but they cannot stop this. The demand is way too high. The consumer is going to find it. They're better off finding it in a compounding pharmacy, not going to the cartel in Mexico to get their hand on Ozempic, or that Chinese Ozempic from Vancouver that gives you AIDS right away, or the Israeli Ozempic that blows up your colon right away. I don't think they're going to do it. Sorry, the bubble is over. It's gone. And the morons who are buying the dips in Eli Lilly and Novo today, they're going to get massacred in the next ride down. You might have a good day or two in a rebound and you think that, Eli Lilly is going to go higher. But the company slashed the guidance. You see what's happening around you. The availability of Ozempic is all over the place right now. And it's cheaper. It's over. And the next drop will be even bigger. Next on the earnings calendar, we got AbbVie. This one is a pharmaceutical company that I do like. I had to sell it though. I was long AbbVie for a while, but it went way too high. I had to dump it and buy something else. Do we buy it again? Because the stock is up over 6% today. It pays a really generous dividend. We know the dividend stocks are hot right now. So we're going to reassess all of this in a video where we talk about AbbVie, Pfizer, Bristol Myers, which we're going to get tomorrow. And we might do Merck too, because Merck is going to report tomorrow. So we'll do one of those. It doesn't matter if it kills me over the weekend, folks. I will get these videos out to you. It's going to be worth the price of admission. And after that, we got Caterpillar, and the stock is down over 2%. It was down even more. But again, the dummies keep buying the dip, the robots. The company missed top line, bottom line. It ain't looking good. What are you buying the dip for? Are you just programmed to buy any dip you see? Eli Lilly, Caterpillar? We need a little more pain, folks. They buy the dip, they get crushed the next day, and the day after, and the day after, and then all the calls go kaput at the end of the week. Then the fear of God will begin to sink in. But folks, after the bell, the most important one that we got is Microsoft. And here's what we got from Microsoft. Of course, the worry is the increase in cost, would it deteriorate the operating margin? And right now, the answer is no. The operating margin for Microsoft was 46.58. It's pretty good, actually. It's the highest since Q1 of 24. I mean, they call it Q1 24, these morons. But it's actually Q3 of 2023. So I don't know why they do that from an accounting perspective, but this is a decent number in the operating margin. And then we talked about the revenue growth in Azure, 31% in Q3 24, and then 30% in Q4 24. Again, the stupid accounting by Microsoft. But we need a number in the 30% range, 30%, 32, 33. That'll be good. Well, we got 33%. So again, Microsoft delivers on the operating margin, delivers on Azure growth. Why do we see the stock down? Weak guidance after beating on earnings. So from this point on, they warn about slower growth in Azure. And the problem with that is cost is also increasing. The rate of growth of cost is increasing. I'll show you the example in Meta because it's clearer in Meta more than it is in Microsoft. But the problem is you have rate of growth in your revenue, still intact, still pretty good. But the rate of growth in your cost is creeping in. And at some point, you're not going to be able to deliver these margins anymore. And if you're telling me as an investor that your Azure growth is going to slow down, I'm putting two and two together. You're not going to slow down the rate of growth in your cost because you're amidst an AI war. But the rate of growth in your revenue will slow down. Put two and two together, that's a negative reaction. So we see Microsoft down about 4%. After the bell, trading at about 416.5. Last time I checked, and we got a trade on it, a lotto ticket trade. It was not really a lot, it was expensive. But again, this is Microsoft. It's a big stock with, if you want to make a serious trade on it, at least a serious lotto in this case, got to spend a little more. So what we've done here is for next week, we've done a put butterfly spread, buying the 420 and selling the 400 2-to-1, and then buying the insurance policy of the 380 puts. We also got exposure to the upside in the 460, 480 spread for this Friday. But I told you guys yesterday I'm going to do a trade on Microsoft and even Meta that gives us exposure to both sides, but with a slight preference to the downside. In this case, we spent about $450 on this trade altogether, per contract, of course. But the stock right now is down at 416. That's a sweet spot. We want it to be 416, 415 by the end of the week, if not even 410. That's going to be even better. You see the butterfly increasing in value so long as we're not crossing below 400. If we do next week, no biggie, because we have a $20 cushion. So fingers crossed, I think we'll make money from this trade. And then after the bell, we also got Meta. What's up with Meta? Operating margin, 43% in the quarter that was. The highest operating margin for Meta, going back all the way to Q1 23. Good? Yes, it is. Why is the stock down? Misses on user growth. Warns of 2025 jump in AI spending. It's the same problem with Microsoft. They warned that growth is going to slow down because the economy is slowing down. We told you this, folks, last week, that we might see peak margins in these big cap companies. Then they're going to spend more. So you put two and two together. In the blue column, you have the revenue growth. In the orange column, you have the growth, or the cost growth, rather. It was a problem for the company when Meta got crushed in 22 leading to 23. It was because the rate of growth in cost surpassed the rate of growth in revenue, as you can see. Then, of course, Zuckerberg got sober and stopped the spending like a drunken sailor with the stupid glasses and the metaverse and all of that. And also cut costs by getting rid of thousands of employees. And you see in Q3 23, for example, the gap between the growth in revenue and the lack of growth in cost was impressive, and the stock rocketed higher. Of course, at some point, cost is going to come back. Pay attention if you're watching Tesla. Cost will come back, but the gap was still impressive. This is what Tesla cannot deliver, but Facebook can. The gap between the growth in revenue and cost was still impressive, even though the growth rate in cost went positive. The problem that we have for this quarter, Q3 24, the rate of growth in revenue, 19%, but the rate of growth of cost is 14%. It's beginning to creep back in, and it might take over. Zucchini is saying it's gonna take over. What does that mean? The peak of the stock is behind us, and it should be heading down. So we see Meta down about 3% after the bell. I think that if you're a Meta investor, at least you gotta hedge, because the heydays of the gap between the growth in revenue and cost, that's coming to an end now. We're gonna run into the same problems that we talked about back in 22. Now, in the case of Meta, we've done a proxy trade using the XLC, the communication ETF. And again, slight preference to the downside, so we bought the 93 puts. The expiration date next week, November 8th. and we bought the 95 calls with the expiration date of this Friday. All in all, it costs about $1.40 a piece. I think we'll be able to make money from this trade here. If the XLC dips below 93, I mean, Google is keeping it afloat, but Google will go down tomorrow in empathy of Meta. And if that is the case, I think we're going to squeeze gains out of this trade. The last thing I want to show you, Jim Bianco got a really good piece right here. He shows you the divergence. So we talk about the divergences as of late between bonds and regional banks, between everything. Specifically, if you have the dollar and gold, for example, we have them going higher together. That doesn't make sense at all. And here Jim Bianco says that, look, the 10-year yield going higher, but oil going down. Usually they trade together. If oil is going down, then there is no inflation fear, and the 10-year bond yield should be going down. But then he digs deeper, and he found out that as the odds of Donald Trump becoming president began to increase, that's the moment when we've seen the 10-year yield moving higher. So the question now becomes, is what we're seeing in the VIX, the dollar, bond yields going higher, all because of this fear that Trump is going to win? Because if that is the case, comes the elections day next week, and Trump loses, everything is going to reverse. And with that comes a lot of trades, a lot of juicy trades. If he wins, we're probably going to see more of what we have right now. And that's going to bring probably short trades and a lot of stuff. So maybe I think Jim Bianco is onto something here, that the market is afraid of the orange man becoming president again. Keep that in mind. Now, the trade that I got is for DJT. You got to be careful here, but I think that this trade is on a silver platter. I had to do it, which is, there's a mistake here in the slide that I gave you, but I talked about it in the stream, which is selling the 25 puts, expiration date November 8, and then selling the 70 calls with the expiration date of November 8. You're going to be able to cash in about $700 per contract, which is, again, insane for way out of the money strikes. The implied volatility is something that I've never seen, never. So to me, this is a trade on a silver platter, because even if the stock crashes or rockets after the elections, the implied volatility will go down. And even if it is above 70 or below 25, you're probably going to keep the majority of that credit. The only problem with a trade like this is the margin. And I did not use margin. I used my cash account and it went through. So I don't know what they have in margin requirement, but some of you folks looked at Interactive Broker, for example, and they're charging you about $6.5K for one contract in margin. No, don't do it. That's absolutely absurd. The most you should be paying for this is $700 to $1,000 per contract. You're not really paying. It's just the margin requirement. Anything more than that doesn't make sense at all, because again, if the stock indeed goes below 25 or above 70, the implied volatility will be down. And you really don't need $6.5K as a margin requirement. So shop around, but this is the trade that I think on a silver platter, the short strangle. And again, not the 25.5, the one that I sold the 25 and then sold the 70 calls. A big boy, I know what the risk is, and I consume it. So study this trade. If you like it, follow it. If you don't, maybe you got to look for another structure, an iron condor or an inverse iron condor, or whatever you like. But the point being is the highest implied volatility we've ever seen in the stock market, fluffing up the premiums of options, and it looks to me as a gift. I mean, the market maker is probably jerking off to all of this because you have folks buying calls and buying puts, and the market maker knows for sure it's going to collect all of these billions and billions of dollars worth of bets. Anyhow, folks, let's move on here and add more color to this conversation by revisiting the market activities today, beginning with the closing of the indices. And here we go. The diamonds down by 91.51 points, or a loss of 0.22%, and the Nasdaq also in the red, down by 104.82 points, or a loss of 0.56%. The Spider in the red too, down 19.25 points, or a loss of 0.33%. And the Russell 2000 was the outperformer in the morning, but gave it all away and closed negative 0.30 points, or a loss of 0.14%. In other words, Google was not able to rescue the market from this fear that keeps the VIX heading higher, and today it went all the way to 20 again. The market wanted to rally initially. That's why we opened higher, and the dip was bought right away. Google Optimism, Microsoft up 2%, Meta up 2%. But then that VIX moved higher again. And according to Jim Bianco, it's all about the orange man becoming president. The market doesn't like it. If that assumption is true, by the way, it's just a theory for now. But it has a pretty good solid foundation based on how Jim Bianco laid it out. If we look at the sectors, Comm services is number one, thank you Google, but technology is in the red, the laggard, the biggest loser. But we talked about this possibility in last night's video, that we could see Google, Meta, Microsoft going higher. But then because of AMD, we see the chips going down, led by NVDA, and that keeps the technology sector closing in the red. And today I gave you a really good morning brief summarizing everything. And I told you that we could see Apple, NVIDIA going down, but then we see Google, Meta, and Microsoft going higher. Perhaps Amazon too, because that's a play along with Google. And if you see this dynamic, the indices will be pretty much flattish. They're going to trade up and down, up and down. And you might see that contrast with one sector going up, but all in all, technology going down. This is exactly what we got. The question now becomes, with Meta and Microsoft going down after the bell, will we see technology and comm services going down together? If that is the case, then who's going to assume the leadership of the market? Because we're assuming that the dollar is going to go down and perhaps bond yields will go down. They might go down for the right reasons, quote unquote, tomorrow, because of a lower PCE report. But then what happens if the payrolls miss? Then yields on the dollar will go down, but for the wrong reasons. So you might see IWM going higher tomorrow, but then getting crushed Friday. And that brings the question, do you stick with real estate as the leader, if that is the case? We'll look at the chart in a minute and debate this a little more. But before we do that, let's look at the breadth that we got today in the NYSE, 48% advancing versus 50% declining. And the NASDAQ, 39% advancing versus 58% declining. The breadth was bad across the board. You can see it in the heat map right here. Earnings, of course, lifting up Google, AbbVie, Visa, all of the names that reported yesterday, and the market loved the report. We see these names going higher. But then the names that missed getting crushed pretty big. So AMD down over 10%, and it's dragging all of the chips down with it, including NVIDIA. And by the way, a lot of the equipments too, ASML, AMAT, IBM, all down. The only chip that went higher today, or let's say an AI play, is Dell. And the thinking here, because of Supermicro probably engaged in massive fraud, they're going to lose a lot of business. Perhaps a lot of companies who want to buy equipment for data centers will skip Supermicro since it is not a reliable company and go with Dell. That's the assumption for now. So we see the contrast. Apple, we talked about the bad news, keeps accumulating, the latest being a ban in Indonesia, so the stock is down 1.5%. Eli Lilly down, but NVO up. What do we do with that? Eli Lilly down, but we've seen buying of the dip. Shorts, dip buyers, who knows? NVO, if you look at the weekly chart or the daily chart, already went down before Eli Lilly. So today it bounced from the lower Bollinger Bands. That's all there is. But at the end of the day, the bubble is over. And I think whatever rebounds you get in these names will be faded and will find lower lows once the Bollinger Bands, the lower ones on the daily and the weekly, begin to expand. What's really interesting about today's action, and you look at metals, and sure, we got some earnings, but you see the building stuff, Vulcan and Martin Marietta going higher. But then you look at the Chinese names, they're down. Pinduoduo, JD, Bob, all down. And even the Chinese-related names like Nike, Starbucks, all down. I think we're seeing the Trump election fear here. Or fate China, he's going to be tough on China, the tariffs and whatnot. But he might spend some money on building the infrastructure. That's the assumption here in these trades. Looking at the heat map for the ETFs, not a major move in the TLT, up a little bit today, so we see yields going down. But look at the sectors that went higher in the yield sensitive. Not a major move at all, but we see the IYR, the defensive going higher, and then the risk on KRE also going higher. So for now, maybe it's giving some relief to these bond yield sensitive ETFs, but context matter. Are we about to go down for the good reasons or the bad reasons? And that might change, folks. Thursday it might be for the good reasons because of a weaker PCE. But then Friday, because of weaker payrolls, it might be for the wrong reasons. So now you know that it might shift from risk on to risk off in the yield sensitive. The dollar was down a tick. Didn't help the gold miners though. GDX down because of new amount. So unfortunately, the GDX got to take a pass on that. Stick with the GLD as an investment. And if you want to buy a new position in the miners, I told you, go with Wheaton. Go with Barrick Gold. But new amount continues to go down and it's dragging the GDX down with it. The SLV also down, which is quite weird. The SLV was higher initially, but they flushed it down. And I think there's manipulation going on in silver here in dragging it down because there is no reason for it to go down like this. Again, the dollar going down a tick. It's really flattish. But we see the Chinese markets down. I think that's Trump fear. That we see the cryptos down a tick. Profit taking from the Trump trade, who knows? But I think that cryptos still, if you look at Bitcoin, we'll do that in the charts in a minute. It still look good. Besides that, today, because of the news from OPEC, you see USO going higher. Now, with that, of course, energy stocks, although the XLE was the laggard, the XOP moved better with about 1% to the upside. And we'll look at the charts once again in a minute. But before we do that, the commodities, here it is. In the OPEC news, we see a rebound, a decent one for the WTI and Brent, about 3.25% for Brent, and heating oil moving higher, gasoline a little bit higher, but it is the lowest price in about a year or so. Would that do the magic and allow Kamala to win? Imagine if Kamala loses. After all of the manipulation, all of the fake data, all of the trillions and trillions of dollars that Janet Yellen wasted, and then they lose either way? Interesting. Anyhow, we look at softs. Lumber continues to go higher. This is not going to be good for the home builders. And then cocoa, finding a footing again, building on the gains, but it's not getting out of a range where we say, okay, we have a breakout. If we look at metals, the risk on copper still flattish. Palladium pulling back, giving you a decent pullback, about 6.25%. So folks who said, hey, do I buy palladium yesterday and the day before? Well, you got your dip right now, but you're too scared to buy. Psychology, baby. So the way to approach it, if you agree that the dollar might go down, and palladium is going to benefit from it, is to buy the dip via increments. You don't need to go all in. You buy 25 right now, see if it recovers, finds the footing, or does it need to revisit a lower support line. A lot of grains did pretty good today, led by soybean oil and then soybeans, although wheat closing positive but retreating a little bit. I don't see a breakout yet in wheat. If I see it, I'll show you the charts and we'll play it together. Moving on to the big casino options, what do we see here? If you look at the volume, it increased dramatically today. For NVIDIA, about 2 million, and then Supermicro, AMD, and Google, and SoFi remains hot. All of them joined the ranks here in increased volume. But you gotta watch the IV rank. So in Supermicro, it's 100%. And of course, they're buying the puts right now, but you're overpaying for the puts if you bought them today. And the likelihood is it might rebound because the market maker got caught with their pants down. Now, a lot of puts are right now in the money. So they might try to move it higher at the end of the week to at least make some of the puts that are in the money right now expire worthless. They're going to try to do that at least. Now, we see Tesla, the IV rank still in the stable side, and so is NVIDIA, so the options are still attractive in those. And in Alphabet, we see it moving a tick higher to 40 on the upside, so that could suggest that if we see Google reacting positively despite Microsoft and Meta tomorrow, we might see more gains in Google. So keep that in mind because the IV rank is still attractive in Alphabet. It's not attractive in DJT though. 97 got almost to 100 today, so the stock is down about 22% or so. I think they might rebound it higher again tomorrow, but then it fades because they got to book profits at some point. Thursday, Friday, I mean, it says that Trump is going to win, but you never know. So I think folks will take more risk off the table here and trim their positions because they are big. I think Trump media will head down Friday into Monday. Looking at the flows, bullish flows for the TLT, for bonds, for Coinbase, MicroStrategy, notes, the Treasury notes, of course, ZF. Then DJT again, they keep buying. Roku, Apple, ASML, Gold Futures, GLD. We see bearish flows on the Qs and Morgan Stanley, but most of this is a dividend play, so don't get sucked in. KMI, Kinder Morgan, APD, IWM, E-mini Futures, SPX, Eli Lilly, OKLO, and AMD. On top of that, the popular SOXL, which a lot of retail traders are buying right now to play the chip side of the AI mania, but that's going down and now they're buying puts on it. So we're going to explore more as we do these unusual activities. Let's begin with a chip name, AMD. They're buying the dip. They bought the 150 calls September 19th, 2025. That's next year. Spending about $1.25 million. So here's somebody saying, look, AMD might go down in the short run because they gave a weak guidance. But based on the trends that I see, the report was pretty good, was decent. And it appears that maybe AMD is beginning to chip away at the market share of NVIDIA. I think that's why they're buying the dip here all the way to 25. And speaking of NVIDIA, immediately the manipulation comes right off the gate. So NVIDIA gaps down and immediately we see this computerized buying of the 144 and 141 calls with millions and millions of dollars with the expiration date of November 1st. So they tried. The problem is, if you see Microsoft showing a peak in margins and Meta showing the same thing, at some point, they're going to have to cut spending. And the market always looks forward. If they're going to cut spending, who's the biggest victim? It's going to be NVIDIA. So we'll watch NVIDIA carefully tomorrow. If the chips go down again, I think it's going to sour the sentiment. And it might cause a breakdown where we see the VIX going above 20 in a rapid way. Then we see the NASDAQ and the SPY breaking the rising wedge patterns in a flush down. Keep that in mind. Somebody also bought the dip in Eli Lilly, 900 calls with the expiration date of June 20, 2025. spending about $1.3 million. Now, they already scored big on this trade since the dip was bought and we've seen a rebound. Eli Lilly was down about 13%, closed the day down only 6%. If they take it off the table, then it was a trade for the day, because it doesn't make sense to me to buy the dip in Eli Lilly when the dynamic that led to the rise of the stock is now over. Then we have a bullish one for the EWZ Brazil. Somebody bought the 30 calls, they sold the 31.5 calls, the expiration date November 15th, spending about $1.2 million. I mean, this is a bet on the dollar going down and the prices of grains and coffee and oil going higher. I don't know. I think if we see the dollar going down for the wrong reasons, sure, you might see the EWZ going higher, but I'd rather be with actual commodities because you still have financial exposure in the EWZ, the Brazilian banks, and those might do worse if the U.S. stock market goes down. So the reliability here is not pretty good, even though the Brazilian market is way undervalued. We all know that. We have a bullish one for GLD, a big one. Buying the 280 calls and selling the 380 calls, the expiration date June 18th, 2026, spending a little over $3.5 million. I think gold is in a breakout. It's going to be a multi-year breakout. You will see a big flush down in gold when the crash happens in the stock market, because there's going to be a rush to the dollar. That's the last resort of safety. And then we'll see gold going down, but then it's going to rebound and move higher again as the recession officially begins. And this is exactly what we got in the 08 episode. If we segue to the bearish trades that we got today in the unusual activities, we have a big one against the Qs. Listen to this. They bought the 465 puts. They sold the 441. Expiration date March 21st, 2025. Spending about $100 million. This is not a hedge because it's not naked. This is a spread. This is betting on the Qs to go down. And then we have DECK, Deckers Outdoors, another name that I want to short, by the way. And here we have somebody who bought the 165 puts and they sold the 145 for the expiration date Jan 17, 2025, spending about $1.25 million. So this could be a good way to initiate that short, because timing a top is always a tough job to do. So initiating the position via put options and risking about $6 to $5 is a lot better than shorting and then the stock keeps going higher. Now you're stuck in the margin requirement and you cannot trade anymore. You're better off buying the puts first and then exercising once the trade works out. You can do the same in any shorts you see possible in the market. And speaking of, we have SMCI Supermicro and somebody's shorting even more. They bought the 18 puts. How about the zero? Can we do the zero? It's going to go down to zero. Here's somebody bought the 18 puts, Jan 16, 26, spending about $1.25 million. And then we have puts on the IWM. Every time the IWM rallies, we see the skeptics jumping right in buying puts, as if there's an underlying bet in the market that says there is no soft landing. Stop buying the profitless companies. Stop buying the IWM. It ain't going to happen. And today we've seen a reversal. I mean, it was positive, then closed negative. Perhaps these trades had something to do with it. In this case, they bought the 212 puts for the expiration date December 20, spending about $2 million. Wasn't the only one. A more aggressive one, the 193 puts, the expiration date March 21st, 2025, spending about $1.75 million. Let's segue to the charts and then wrap it up. I told you folks since the beginning of the week that trading the indices is going to be boring. And you look at the hourly chart for the SPY, it's been flattish. It's doing nothing at all. Unless you can time these big swings down and up, which most of us don't have that kind of skill, to be honest with you. There's no point of trading the indices right now. They're going to be subject to earnings and the VIX. It's going to open up next week, the indices. If we have a break in the rising wedge pattern, oh sure, we have a short trade in the indices. But one step at a time. Right now, it's an individual game. The weak link, Apple, NVDA, maybe soon enough it's going to be Microsoft, Meta. The strong right now is Google, because it's the only one that delivered pretty good. But the chip stuff might drag it all down. If the NVIDIA goes down, it's going to drag the SPY in this case down. Folks, we have a negative pattern. It appears that as we're stalling, we're going to break to the downside. Got it. But no confirmations yet. We haven't lost 578.54. We haven't lost the most important line, 574.50. We may, by the end of the week, do that. And if we do, definitely we'll place a short in the SPY. Another confirmation line is losing the 20 days moving average. That's sitting at about 578.69. So it is close enough to the number that I got, 578.54. You know the deal. You close below the 20, you're probably going to go down all the way to the lower Bollinger Bands. Then we look at the Q's hourly chart in range, but at the higher range. We'll see if that's going to hold with Microsoft Meta. A warning sign would be losing 493. But the bull to bear advantage line is 487. So the bears are not going to gain the advantage officially in the Qs, absent of losing 487, not just losing, but closing below. Looking at the daily chart for the NASDAQ futures this time around, what am I trying to show you here? Oh boy, this pattern doesn't look good. It's a rising wedge. It appears that we're going to break to the downside. Then you look at the weekly one. Oh boy, if this one breaks down, it's going to be the end. The top was in July, as I called it. And if this happens and the rising wedge indeed give us a flush down as a confirmation that the top was in July, I'm going to make a video reminding you of what I said about it. Now, if the Qs blasts higher above the July top, then I'm not going to talk about it. Anyways, moving to the IWM, the Russell 2000. The daily chart. Today in the stream with the Top Guns, somebody said, look, I'm short the IWM via put options November 15th. What do? It looks like it's going to go higher. I want to cut my loss. And I said, look at 222. Give it a little bit of time till the end of the day. If it appears that we're going to close above 222, yes, cut the loss because the probability is you wake up tomorrow and we see yields going down because PCE came out weak, aka the good reasons. We might see the IWM going higher. But if it closes below 222, maybe you want to consider keeping it. Today looked like a reversal candle in the IWM. Of course, the confirmation is losing and closing below the 50 days moving average in blue. Then we can short it all the way to the trend line at least. So a big day coming out tomorrow, but for now, this reversal and close below 222 is a negative one for the IWM. The dollar going down a little bit and losing some momentum in the MACD, my 2 cents, weaker PCE, weaker jobs data will bring the dollar down. But context matters. If the PCE is down, and this is why we see the dollar going down, that means the dollar is going down for the good reasons, which means copper should be going higher. If, on the other hand, we see in the payrolls a weaker jobs report leading the dollar to go down, then it's going to be good for the risk-off metals, that's gold, maybe silver, but it's going to be bad for the risk-on metals, that is copper. So the old man right now, if we look at it, sky's the limit. Don't stop inside here unless the dollar, of course, rockets higher. Because of a hotter PCE, I don't see that's happening. And frankly speaking, the dollar been going higher along with gold, so that's not a concern at all. The concern is in the gold miners. If you long gold via the gold miners, you got to be really careful because Newmount, it looks that it hasn't found the footing yet. On the daily chart, it is oversold, got it. It might rebound Friday, as we see a lot of puts in the money and the market maker moves it higher. But then look at the weekly chart. It doesn't look like it's done. It looks that it might be going down all the way to the lower bands or the 50 weeks moving average in blue at least, which makes the GDX a shitty choice to make bullish bets on gold. I would say stick to the GLD, stick to the commodity, stick to the physical gold, and use the gold miners as a hedge. If you want to buy the gold miners, you got Wheaton, you got Burry gold. But the GDX is not good until we find a footing with Newmount gold. What about the SLV? Still positive in the SLV. Problem is if the dollar goes higher, I think the SLV will go down. So still it makes a pretty good hedge against your gold position. But I would also accumulate calls here. If you think that the dollar is going to go down, for good reasons or bad reasons, doesn't matter for silver and gold. They're going to go higher. So I'm still positive on silver here that it might find footing and head all the way to the upper Bollinger Bands. So this week, my hedge against my gold position is short the GDX, puts in the GDX, but I do have calls in the SLV. What about crude oil? Nice rebound today, but it didn't fix a lot. We need to close the gap. We need to trade above the gap. We need to close above the 50 days moving average. So there's a lot to do here for oil to go higher. And if we think that the dollar is going to go down for the wrong reasons, a recession reason, weaker payrolls, it ain't going to be good for oil. So it might be a tough few days here for oil. It's going to struggle to move higher. What do you do with the XLE though? If you have oil stocks, it looks that the 50 days moving average is a no-go. We're not going to make it. So how far down can we go? We have to look at the weekly chart. We lost the most important line, the 50 weeks moving average. The next support we got is the 100 weeks moving average at about, let's say, 87. We might stop there, and we should stop there and rebound. Or let me rephrase that. We must rebound from the 100. Why? Because if we keep the 100 weeks moving average, get a rebound, the chart might be forming an inverse head and shoulder pattern and head higher again. But if you lose that 100, it's going to be bad. It's going to be because of a recession reason. The bond yields are not showing that yet, so we look at the 30-year bond yields, caught a rebound from 444. Can we do another retest? Yes, we can. Weaker PCE, weaker payrolls can lead the 30-year down. But the context matters, so if it is for the bad reasons, it ain't going to be good for the XHB. XHB at the lower daily Bollinger Bands for now, but if we switch to the weekly chart, if we have a close below the 20 weeks moving average, you got to take the shot in shorting it all the way to the lower weekly Bollinger Bands, and the trade would be 115-100 call spread, the put spread, of course, or the 110-100 put spread. You got to go to the 25, though. The IYR real estate weekly chart. The assumption is if yields go down for the wrong reasons, it should be good for the IYR. But I have a hunch that the IYR would go down regardless. Because it is forming this inverse ABC in the weekly chart, momentum is shifting from bullish to bearish. Of course, if yields go higher, then the C leg is going to play out right away. But I think if yields go down for the wrong reasons, you might see even the IYR going down. Because at the end of the day, the IYR, real estate businesses are cyclical in nature. They're only defensive because they pay dividend. I think the market will begin to distinguish that if I want defensives, I'm better off with Procter & Gamble, Coca-Cola, healthcare, but not real estate. Now, the risk on KRE, it moved higher today, but it closed pretty much closer to the lows of the day. It impacted, of course, the IWM negatively. It is trading within the channel right now. If we see another failure, if it fails to maintain 59.59 as support, then we're going to head down to the lower end of this channel. Right now, it's a little too early for that assumption. What about BABA, Chinese names, 4 hours chart? We have positive momentum, but it's not playing out aggressively yet. There's that fear of the Trump elections. I'm hoping that we can do an ABC to 103 and then move down because of election fears. Because if we don't do that, and we keep going down because of election fears, we might go down all the way to the 90, if not even below. And that's going to take the entirety of the gains out of Alibaba. So if you long the Chinese names, BABA in this case, your hedge, shares of Yang, YANG, the inverse index of China, or if you like options, you do the puts on the FXI. You can use spreads if you'd like, but you need some sort of protection plan because if the market overreacts, it might drag the Chinese names down big. It wouldn't make sense. The valuations are pretty good, and we're about to get earnings from BABA and JD and all of that. But again, the psychology also matters, and that fear of Trump, look at what it did to the bond market. If you believe Jim Bianco's theory, look at what it did to the dollar or the VIX. So it might do a number on the Chinese names too. And speaking of the VIX, here it is, 4 hours chart, closing above 20. We made it, above 20, bearish confirmation. I think there is more where that came from. If that is the case, one of the most sensitive names to the VIX is the Big Kahuna Apple. It might break the rising wedge pattern. If that is the case, it heads down to 223. Of course, it has earnings tomorrow. In China, revenue is going to matter. iPhone guidance will matter. The racketeering revenue, aka the services revenue, will matter. But if I'm bearish on Apple, I think it's going to head down. The trade might be buying the 225 and then selling the 220. Or buying the 225 and selling the 215 if you'd like a better profit margin. We'll do a lot on it, of course, as we do usually. And we'll consider all of that. But right now, it looks it's probably heading down. The souffle pulled back on the bad news from BYD, but you got to be careful because it's an options/mechanical phenomenon. And it might last all the way to the end of the week. Usually does a week or two. And you might have the risk of an ABC breakout. To have a confirmation that's not the case, you need to lose 251 and close below 251. So the trade right now for the bears is 251. If you go below that, you can get more aggressive. But right now you have that risk of the ABC. So for now, I'm not there yet in shorting Tesla. NVDA hourly chart, topping in a shoulder pattern, gap down, but didn't close the 136 gap entirely. Can we do that tomorrow? Sure. With Microsoft down, Meta down, we might see NVIDIA also heading all the way down to 136. What's important though, in the daily chart, appears to be a channel that we're trading in. And then you look at the MACD indicator, it is flipping from bullish to bearish, which means we can retrace half of the range of that channel or the lower end of that channel. So we have to plug in the Fibonacci retracement lines and see the guidance here from Fibonacci. The next support will be about 130, and after that comes 121 and 63. Let's call it 121 and a half. So the trade that I see in NVIDIA, either you go with next week's a long put butterfly, you buy the 135, and since 130 is support, you sell the 130, then you buy the 125 as a hedge. Cost you about 75 cents a piece, and you can make all the way the max profit 420. So this is a pretty good risk versus reward. Another idea is buying the 135 and then selling the 130, so you have a put spread, but for a longer expiration date at November 15th. It costs you about $1.45 a piece to make 350. So again, the risk versus reward is not really bad. Lastly, Tulips Bitcoin looks pretty good. above the line that we need it to be above. And I think that with the Trump elections optimism, it might continue to go higher. So we're going to stick to being long Bitcoin for now. Although the problem is MicroStrategy. So if you're going to play upside momentum for Bitcoin, be careful of using MicroStrategy as the way to do it, because it is showing a topping candle outside of the upper weekly Bollinger Bands, and I think it's down after the bell, because this is a squeeze phenomenon. And you have drunk Michael Saylor. He wants to dilute the shares by the tune of $45 billion, not million, $billion, so he can keep buying Bitcoin. It's insanity. You're putting all of your eggs in one basket, and Bitcoin has never been tested in a recession scenario. And on top of that, you're diluting the shares. So be careful. If you're going to go long Bitcoin, don't do MicroStrategy. Do something else. Coinbase, Robinhood, Beto, BD. In case of BD, of course, you want to have puts on it. The ETFs are okay if you want to use those. IBIT, for example, but avoid the grayscale stuff. It's a little bit on the scammy side. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? The most important event is the PCE. I don't expect a huge surprise here. I expect it to be a weaker number. And if it is, we'll probably see the dollar and bond yields down. The only devil's advocate that I can think of, the majority of the drop in the last CPI was primarily because of energy going down. But the core CPI went higher. Now, the PCE doesn't really consider energy as a factor. It considers the core CPI, with different weighting, of course. So that could be the reason why we see an upside surprise in the PCE. And if we do, oh boy, the dollar and bond yields are going higher. It's going to be for the wrong reasons. We're going to have a negative reaction in the market. Then we have initial jobless claims, the employment cost index, and the Chicago PMI. On the earnings calendar, really important day. In the morning, we have MasterCard, Merck, Uber, Bristol Myers, and Regeneron, all important companies. And all eyes, of course, will be on Merck. It went down big. Can we find a footing? Or will we find a reason why Merck been trending down, such as an announcement of an acquisition by management? We'll see what happens, but Merck will be really interesting in the morning. And after the bell, we have Apple, huge importance, the biggest rate in the market. And then you have Amazon, AWS growth. If you look at the Azure growth, probably a good leading indicator, but then what about the cyclical business of Amazon? Are folks still buying stuff, or are they slowing down? That's going to be incredibly important. And then Intel, can they do anything here to save the company, or will it be the final straw in the camel's back, the nail in the coffin? Or whoever remains as an investor in Intel or bought the dip recently says, you know what, big mistake, let's get the hell out of here. And speaking of getting the hell out of here, we have reached the conclusion of this video. If you found it informative, well, you're already paying members, so I'm not going to ask a lot of you. I'm just going to say thank you for listening, thank you for watching. And the last thing I want to say is today in the chat and Discord, I've done maybe 20 minutes or 15 minutes out of the hour that I usually promise you. So we'll do a longer session tomorrow. So we're probably going to do 11:30 Pacific time till the close. So I'll give you a little more in case folks want to ask questions and all of that. We'll have more time to do that. But besides that, thank you for listening. Thank you for watching. Love and appreciate all of you. We'll be talking to you again tomorrow. Good night.
To reclaim the American dream and reaffirm that fundamental truth that out of many we are one.
You hear that line? Line's for you. Don't make me laugh. For one people. It's a myth created by Thomas Jefferson. Now you can never go with Jefferson, huh? My friend, Jefferson's an American saint because he wrote the words, all men are created equal. Words he clearly didn't believe since he allowed his own children to live in slavery. He's a rich wine snob who's sick of paying taxes to the Brits. So yeah, he wrote some lovely words and aroused the rabble, and they went out and died for those words. Well, he sat back and drank his wine and fucked his slave girl. This guy wants to tell me we're living in a community. Don't make me laugh. I'm living in America. And in America, you're on your own. America's not a country. It's just a business. Now fucking